Hello dear students, welcome to Devika's Commerce and Management Academy. No stick today because I'll work out without stick. Cash flow statement already we have done few problems. Today's problem I'll take few adjustments. Most of the repeated adjustments. With adjustments how to work out the cash flow statement. Now let's enter into the problem. Just focus. Most of the things are because in the as per the previous problems only adjustments point of view this. Now they're asking prepare cash flow statement. Here fixed assets they are asking. Fixed assets means it comes under the B category. Okay. So B I'll say cash flow from investment activities. Stock. Stock is related to the cash flow from operating activities. So A. Debtors also current assets. All current assets comes under the cash flow from operating activities. So current assets, so A. Cash is opening and closing balance, so we don't touch it. Preliminary expenses which comes in the adjusted P&L account. So far in the previous problems related to the adjusted P&L account, information was not given. What do we write it on the adjusted P&L account? Adjusted P&L account. Opening balance, credit side, closing balance, debit side. Return of goodwill, return of preliminary expenses, anything is given in the balance sheet asset side, that comes on the debit side. General reserve comes on the debit side, general reserve, and what else it is given here? The adjustments, any adjustments related to that information comes on the debit side. Now anyhow we'll work out. Am I clear about this asset side? Yes. Now go to the liability side. Equity share capital, which comes under the cash flow from investing activities. So it means C. This is C. General reserve, adjusted P&L account. So shall I write here adjusted P&L account. Profit and loss account, adjusted P&L account opening and closing balances. Sundry creditors, which comes under the operating activities. So A. Current assets and current liabilities always A bit. Okay. Now asking adjustments of two items. One is depreciation charged on fixed assets for the year was 20,000. Depreciation always comes on the debit side of adjusted profit and loss account. There we are going to write. When depreciation is given related to any fixed asset, please remember depreciation is given in adjustment means you have to open that asset account. Am I clear? Any depreciation is given related to that asset account, you have to open it. So that is why I have drawn already columns of fixed assets account. Why we are opening? Because depreciation is given. If depreciation was not given directly, we could have taken cash flow from investment activities. There we could have written. But now here depreciation is there. So fixed asset account we are going to open. Second one is income tax paid in advance during the year. Income tax also, which comes in the adjusted profit and loss account. Income tax whenever it is paid after writing all the operating activities, we are going to deduct it. Clear? Now let's work out first. What shall we do? First we'll open the fixed assets account. Whenever we want to open the asset account, opening balance debit side, closing balance credit side. If you want to open the liability account, opening balance credit side and closing balance debit side. This rule you have to remember. Now we are opening the fixed asset account, opening balance debit side. To balance brought down, how much? 93,400. To balance brought down, 93,400. That is the depreciation. Depreciation always comes on the credit side. Why credit side? Profit and loss account debit side we know. Profit and loss account debit side. Now here it comes on the credit side, double entry system. So by depreciation, how much is the depreciation? 20,000. Nothing else to write. So closing balance of fixed assets 1,66,000. By balance carried down 1,66,000. So balance we are getting on the debit side. This is 1,88,000. minus this is, we say it as a cash. You can say it as a purchases, cash purchases. Balancing figure this is. Always remember, something is you are getting balancing figure on the debit side, that is purchases. Asset account debit side means purchases. If you get balancing figure on the credit side, it will be sales. Sales, purchases. Debit side you got, so I am writing purchases. How much is the balance? 1,88,000. Sorry, 86 na? 1,86,000. 1,86,000 minus 93,400. Correct. 1,86,000 minus 93,400. 92,600. 92,600 you got. This we are going to take it into the cash flow statement. Next we'll prepare the adjusted profit and loss account. Adjusted profit and loss account, here profit and loss account, opening balance credit side, closing balance debit side. So we'll start with the opening balance. By balance brought down. How much is the opening balance? 20,000. Closing balance we'll write later. First we'll see what are the activities to be taken. First of all, depreciation is there. To depreciation 20,000. Then after that, general reserve, transfer of general reserve. Here we can find even preliminary expense also. Any items like invisible assets. Okay, so those items will take. Written off preliminary expenses. Goodwill, preliminary expenses, everything comes on the debit side. Preliminary expenses. How much is the difference? Difference you have to take always. 2,000 minus 1,000, which is 1,000. Then after that, general reserve. General reserve is here. Transfer of general reserve will say. Transfer of or transfer to general reserve. Difference. General reserve difference is here. 30 minus 20, 55 means 25,000. Then after that, depreciation is over, income tax is there. Expenses na, any expenses which we could not take in the profit and loss account. In general, that is adjusted profit and loss account we are going to take. So tax is 5,000. Did we forget anything? No. Already I have written adjusted profit and loss account, general reserve we have taken. Adjusted profit and loss account, preliminary expenses that we have taken. Now we'll write the closing by balance carried down. How much is the balance carried on? 30,000. 20,000 and 30,000. Now we'll see debit side is more. 20, 50, 20, 30, 50, 50 and 30, 80, 81,000. 81,000 minus 20,000. 61,000 I think. 61,000. This is operating profit. By operating profit. Balancing figure. Total is 81,000. 81,000 minus 20,000. 61,000. Both are ready. Now we can open the cash flow statement. Cash flow statement, first one is cash flow from operating activities. This will keep always heading. Cash flow from operating activities, then after that cash flow from investment activities, debit, then cash flow from financing activities. In operating activities, related to the current assets and current liabilities only we are going to take. Now you see, current assets are stock. Just let me identify. Current assets are stock, debtors. Only two. Cash we don't touch. cash will be the opening and closing balances. So, and here current liability is creditors. 3 items are there. Let's focus first stock. Stock is increasing. Current asset increasing means minus. Okay, less. Few items will add, few items will deduct. Less increase in current asset. Increase in current asset. What current asset? Stock. Sorry, decrease. This is, yeah, increase. Increase in stock. In the same way, debtors. Debtors are also increasing. So we'll minus it. Less increase in debtors. This is 3000. Before going to that, we could have taken this operating profit. To the operating profit we are going to add. So I'll write here first operating profit. How much is the operating profit? 61,000. We'll write it at the outer column, 61,000. To this we are going to add current assets, whether increasing or decreasing. In the same way, current liabilities also. Both the current assets are increasing, so deducted. Now there is a current liability. Current liability is increasing. Current asset increasing, deduct. Current liability increasing, add. Okay, so add increase in creditors. Creditors, how much it is? 17,400 and 22,000. 22,000 minus 17,400. 4,600. So we'll add 4,600 here, and it comes to 65,600 minus 7,000. 65,600 minus 7,000. This comes to 53,600. 8,600. There is a tax. If tax is not there, we could have ignored it, but there is a tax, minus income tax, you can say. How much it is? 5,000. So this is 53,600. It means cash flow from operating activity. This is EBIT. Cash flow from operating activities. This is 53,600. We can underline it. EBIT we got it. Now we'll focus on the BBIT. BBIT is cash flow from financing activities. BBIT, cash flow from investment first. Cash flow from investment activities, then financing activities. So investment activities means only fixed assets, not anything else. Okay, so let's see fixed assets. Fixed assets we have only one. Actually it is 93,400 to 1,63,000 purchasing, but now we open the fixed asset account. When we open the fixed asset account, whatever we got, this one we are going to take, because after considering the depreciation. So this is purchasing, purchase of fixed assets, purchase of fixed assets. This is how much? 92,600. Purchasing means cash outflow. Selling means cash inflow. Whenever cash is going outflow, that is to be minus value. So writing in the brackets. We have only one asset, so that we have written. The same one is the cash flow from investment activities. So we got first one is A bit is this one and B bit is this. Then cash flow from financing activities, C bit. Financing activities. Financing activities means we have to focus on the liability side. Okay, liability side like share capital, long-term investment, debentures, those items. Now we have only one item that is equity share capital. Equity share capital is 90,000 to 1,30,000. It is increasing. Means issue of share capital, equity share capital. We'll write the same thing. Issue of equity share capital. This is how much? 90,000 to 1,30,000 means it is 40,000. Only one item, no? So I'll write it outer column directly. So we'll underline this one also. Issue means cash inflow. We are getting the cash. So positive value. So this is C bit. Now all the items are over. Now what to do? Increase or net increase or decrease in cash or cash equivalents. Net increase or decrease in cash or cash equivalents. Means A plus B plus C. A plus B plus C. If you see, this is minus value. Okay, these two are plus values. How much we are getting? Plus values are 93,600. 93,600 is the plus values. Okay, if you want, I'll write here 93, 53,600 plus 40,000. 93,600. 93,600. This is 92,600 minus value. 92,600. It means 1,000. 1,000 we are getting. 1,000 is positive value. So our answer is 1,000. 1,000. To this, what do we add? Opening balance. Opening balance of cash. So that is opening balance of cash. Opening balance of cash is how much? 4,000. So 5,000 we are getting. 5,000 is what? Closing balance of cash. Cash balance at the end of the year. So this is the final value. Cash balance at the end of the year is 5,000. 5,000, is it matching with this closing balance? Yes. Opening balance, when we add 4,000, this we are getting 5,000. Closing balance, you got it. Answer means the problem is correct. Am I clear? Simple, easy to remember. Take a screenshot, then I'll explain it once again. See, the problem is very simple. Only the thing is you should have a good understanding about these three. Cash flow from operating activities, cash flow from investment, cash flow from financing. This is, you know. And when balance sheet is given, you have to identify each and every item. Where does it comes? If you see cash, anyhow, we don't touch it. Fixed assets, B bit, we have written. And current assets, current liabilities, A bit. stock, debtors, current assets. So EBIT. Preliminary expenses, adjusted profit and loss account. Like you have to identify. Now on the creditor side, equity share capital, CBIT. Cash flow from financing activities. And general reserve, adjusted profit and loss account. Profit and loss account are the opening and closing balance of adjusted profit and loss account. And sundry creditors, liability, EBIT, like you have identified. Now coming to adjustments, depreciation is there. Depreciation here, it comes twice. One time is here fixed assets, credit side, and adjusted profit and loss account, debit side. Okay. One time is here, second time is adjusted profit and loss account. In the same way, income tax also. Income tax also comes twice. One time is here. Income tax one time here, and second time cash flow statement you are deducting here. Two adjustments. Simple. Whenever depreciation is given, you have to open the asset account. In asset account, whatever you get, that amount is to be transferred to the cash flow statement. Here you got it on the debit side. Debit side means purchases. Purchases means you are writing there purchases. Don't see this amount. This difference we don't see. This we will see if depreciation is not given. Am I clear about this? And tax is, you know that tax is payment. So adjusted profit and loss account, debit side, and from the operating activities, lastly we are going to deduct it. Simple. Am I clear? Now please remember cash flow statement, both the methods, direct method and indirect method, both the methods I taught you. Now as per your requirement, whatever your syllabus and your course is saying, you can follow accordingly. Check out the playlist. Many subjects already prepared. Don't forget to share these videos. Practice well and have a bright career. Good luck.